Welcome to your weekly market recap. This was a week defined by a paradox, a powerful risk-on rally in equities and crypto, running directly against the simmering fear of a sovereign debt crisis. Call it a policy-driven melt-up with a defensive undercurrent. In Asia, the week was a study in regional divergence, with the Hang Seng emerging as the standout performer, closing at 26,009. 46, up 21% on the day. The index was lifted by a late-week surge, despite Chinese e-commerce giant Alibaba plummeting over 8.5% domestically and over 2.5% in Hong Kong following regulatory pressures. The Kospi also finished strongly, up nearly 0.9% to 6,912.95, with Samsung Electronics rallying almost 4% as global semiconductor sentiment turned a corner. The laggards were Japan and Australia. The Nikkei slipped 30% to 66,016. 36, weighed down by SoftBank's 45% slide and a firmer yen, while the ASX 200 edged lower by 27% to 9,058. 90 on profit-taking and mining majors. The Shanghai Composite, while not showing a closing figure here, broadly mirrored the region's cautious optimism. The clear takeaway, investors favored Korean tech and Hong Kong value, while punishing Japanese spec tech. Across the Atlantic, European markets closed the week in the green, driven more by momentum from New York than domestic strength. The FTSE 100 rose 64% to 10,816. 56, puffed up by mining and energy heavyweights as the precious metals complex soared. The DAX added 59% to hit 26,136. 56, while the CAC 40 managed a more modest 37% gain to 8,484. 43, the European narrative was dominated by the spillover from Washington. Treasury Secretary Bessent's bond buyback announcement is stirring inflation anxiety, and that is a dangerous cocktail for the European Central Bank, which is trying to signal the end of its tightening cycle. European investors are essentially being held hostage by U.S. fiscal policy. With core inflation concerns creeping back, the ECB's hand is forced. Equities are rising on the back of pure liquidity, but the underlying debt worries kept the gains capped compared to the United States. The U.S. market was the clear engine of global risk appetite. The Dow Jones led the charge, jumping just under 1% to 53,277.01, while the S&P 500 and Nasdaq each added 43%, closing at 7,674.37 and 26,180. 46 respectively. This was not a mega-cap tech story. This was a rotation into value and financials. Goldman Sachs surged over 3.5% as the yield curve steepened, and the notable absence of tech leaders in the top gainers list confirms this is a broadening market. Marvell and ARM both dropped significantly, signaling that the AI chip trade is taking a breather. Instead, we saw strength in industrials and select cyclicals. Feedback-wise, the market is betting that despite the inflation scare, the Fed remains on hold, but the whisper is growing that any future cut is off the table if Bessent's gambit fails. Looking at individual movers, the winners tell a clear story. Tesla jumped over 5% on renewed momentum and optimism around delivery numbers. Oracle rose over 3% on continued cloud demand. Merck added over 2% as defensive healthcare plays received a bid in a market suddenly nervous about the implications of rising break-even rates. In the losers column, beyond the Alibaba disaster, Marvell dropped over 5.5% as the AI trade corrects sharply after a massive run. Intel continued its struggle, shedding over 2% after losing further ground in the AI chip race. The surprise of the week was not a stock but a sector. The Earth Materials complex exploded. Uranium ETF gained 5%. Rare earth jumped over 6.5%, and copper miners surged over 5%. This is a massive signal that the market is pricing in a physical rearmament and electrification cycle. Commodities were the epicenter of the week's real action. Oil was relatively subdued. WTI dipped slightly to 86.64, while Brent held just under $94, balancing OPEC supply concerns against weak demand forecasts. The true story was in the metals complex. Gold rallied nearly 2% to $4,661.60, with platinum surging almost 3%. Ray Dalio said it best this week. The Treasury buyback is a sign that a debt crisis is getting closer. That fear is driving capital into hard assets. Copper jumped over 1.5%, and this real asset bid bled directly into crypto. Bitcoin exploded to over $78,000, up 4.5%, while Ethereum surged over 6% to nearly $2,520. The Treasury announcement is sparking a hunt for alternative stores of value. The cryptos and gold are moving in tandem, which is historically a sign of acute fiat currency debasement concerns. On the currency front, the dollar was a portrait of indecision, closing flat at 98.84. The euro barely moved at 1. Markets move fast. We break it down daily so you don't have to. Subscribe for your edge, delivered fresh every session.